All right, let's begin with a quick take on what's happening in the U.S. markets, which are completely retracing their gains that they saw yesterday. So yesterday, the Federal Reserve increased interest rates by about 50 basis points, but that was well expected. That was factored in, and we saw quite a robust rally on Wall Street. That seems to be moving in exactly the opposite direction. Right now, as we speak, the Dow Jones down over 2.5%, 910 points in the red. The Nasdaq with the deepest cut down over 4%, nearly 4.5% as we speak, down 571 in the red, and the S&P 500 also reeling with a 3% hit on stocks in early trade. Let me go across now to Peter Cardillo, who's joining us to try and help us understand what's really going on. Peter, is this a late realization of the Fed's action? Because it was well known, it was accounted for, it was priced in. So what's happened in this morning's trade?
No, I think what's happening today is the market is being challenged by rising rates. The 10-year surpassed 3%, and we see the mortgage rates climbing close to 6%. And I think that's the challenge. And, of course, the market, is being tanked by what's happening in the Nasdaq. And so I don't think it's a reversal in thinking from yesterday's rally. The Fed obviously was hawkish, but certainly ruled out any shock movements or movements of greater than 0.5%. So I think it's just the fact that, rates are beginning to move in an upward cycle across the continents. And we saw that with the Bank of England today. And so I think that's basically what's depressing the Nasdaq and, of course, dragging down the rest of the indices.
So, Peter, if the concerns are with the broader economy and a further tightening of rates, what is the prediction? What kind of a hike is now being priced in, and what's being expected, which was not already announced? I mean, to the credit of the Fed, they have been very transparent and very clear with what's coming. So what is now the fear?
It's obvious that we're headed for a 50 basis point hike in June, probably another one in September. And then after that, I think, we should begin to see rates stabilize. And I say that because I think we're getting very close to inflation having peaked. We might have one more batch of high inflation, but then after that, I think it stabilizes. And of course, the problem is that the bond market is in a extremely bear market, and that, of course, weighs on equities as well. And as I said, the Nasdaq is the one that's really under severe pressure, which is taking down the rest of the indices. But I just want to add one more comment, and this is that I think we cannot escape a mild recession. And I think that's what the market is really looking at now, despite of the fact that Fed Chair Powell said he can combat inflation without taking the economy into a recession. I doubt that very much. I don't think we're headed for a severe recession, but I do think we're headed for a mild recession, and that's what the market, I think, is fearful of.
Well, the mild recession is reverberating not so mildly on Wall Street this morning. Nasdaq still about 4% down, 4.5% down right now. The S&P 500 and the Dow Jones both beaten down in morning trade. Thank you, as always, Peter, for joining us on the show and giving us an idea of what really is going on in morning trade.